it's now become clear from the forward-looking data, the Philly Fed and everything else is just showing it. But if you start to look at the really forward data, like the new orders component of all the regional Fed surveys, they're pricing things like ISM at 35. These are shocking declines, which I've been trying to tell people about. Is economic growth over the next 3 months is going to shock people to the downside, and it's going to change everybody's narrative from, okay, we're in this sticky inflation environment, there's supply constraints, to, oh my God, we've broken the economy.
We'll be in a full recession within 3 months, says Raoul, the CEO of Real Vision. Will the financial markets, including the crypto one, go through a bumpy ride in the next few months? Find out about Raoul's views on current world affairs from his recent interview by hitting the subscribe button and giving this video a thumbs up while you're at it. Now, let's dive right in. Raoul is a famous American economist and investment strategist. Like most people in the field, he's great with charts and statistics, and he knows his stances very well when it comes to financial markets. Recently, Raoul came out with his insights on the current worldly affairs in terms of finances, and he talked about stocks, recession, bonds, and much more. Throughout the interview, Raoul makes use of the ISM charts, which he believes are the best indicators, and so initially he talks about recession. Everyone's aware of how it has already struck the world, and there is more to come. Raoul tells the audience that the rates have gone down from 53 to just 35, which is a severe, sharp recession. He brought up a similar scenario from the past, where in 1973 and 1974, there was an Arab oil embargo and the prices of oil skyrocketed. This led to the collapse of markets and, in turn, the entire economy. Back then, it went from 54 to 30 in just 4 months. This collapse on the ISM is extremely similar to the one being observed today, and of course, oil is one of the major reasons. He also talked about the economic collapse after the Second War and how the recession had gone up to 20%, with prices of all or most goods higher than ever. And the third example he gave was of the ISM collapse in 2018, when market prices increased and the charts went down yet again. Interestingly enough, he showed the charts of inventories of durable goods which went up, and that's because the supply stopped and companies and merchants ended up overstocking, which eventually led to the demand being dead. Logically, the demand has died because the buying power has been lost due to financial conditions being tight. Now, this is a positive scenario for the economy, because people would eventually want to get rid of the stocked inventories, and to do that, the price will get lowered. This scenario might be the bounce back for the collapsing economies across the globe, but that would only happen once the supply issue is resolved and oil is brought down to a decent price. Raoul then brought up the bonds. The ISM has apparently been mispricing them, and currently it shows them at 60, whereas other platforms like the Nasdaq have been showing them down to 40. He referred back to 2001, when the market mispriced bond yields and they ended up collapsing. Even still, currently bond yields aren't exactly collapsing and are still showing better results than other things. Raoul believes that oil is the one keeping bond yields from collapsing, which brings us to the oil and dollar charts. Under usual circumstances, oil and the dollar go hand in hand or close by, but right now they have split up completely. He believes that either the demand or the supply shock would come into play and the oil prices would then reduce to maybe 80, which is exactly the point where inflation evaporates. The most interesting part of his debate was how all of these factors affect crypto. He believes that inflation is a very dominating factor in the crypto market.
The dollar's been the other key variable. There's a lot going on. This is a pure macro environment. It's all about macro right now. So the dollar's been screaming higher. It's kind of stabilized a bit for now. It's not yet clear to me if the dollar moves another leg higher now, or we correct a bit longer and then move higher. Don't know. I imagine if growth implodes, the dollar moves. The dollar is already pricing ISM around 45, so it's already pricing a full recession, but I think it's going to be bigger than that. So I think the rate of change in the dollar goes further. So that's still a wrecking ball, still to keep playing out over time.
Since people have been tightening due to the rising inflation, Bitcoin has dropped very low. It's currently priced at around $19,500. He also believes that risk assets like crypto and maybe Nasdaq crashing can be a turning point for the entire market. He also talked about demand destruction, which would again bring change in the market. He believes it is likely to come about in a shorter period of time and will happen sharply. That is where oil would come back to its original lesser price because obviously there would be little to no demand. He talked about how there is a little more pain to come in the financial markets, be it oil, Nasdaq, crypto, trade, and almost everything, but that would only lead to ease since the inflation after the recession is over wouldn't be that high. Raoul was then asked about the rebound in the digital asset market and where he thinks things would go from here. Like most other big names in the industry, he also claims that this might not be the lowest, that he doesn't know where the low is just yet. This means that if a crisis in the economic market hits, there could possibly be a further drop in the crypto coins. He then answered the question that if he had money to invest in something right now, what would it be, considering he talked about bonds, stocks, equities, and obviously crypto. He said that he's been averaging into cryptocurrencies at the moment and that he has been buying some coins. It is only natural that he wishes to invest in the crypto market since the coins are discounted at the moment and almost every economist believes that the prices are bound to rise eventually, if not instantly. He also added that he's been buying stocks of new tech companies, adding that at this point it is extremely risky to invest in these markets because they are down 70 to 80% or maybe more. The only reason why he has been putting his money into it is because technology is here to stay, and it is bound to grow, so digital currencies and tech startups are the safe zones for investors in a time like this. And eventually, he came to bonds. He said that they, at this point, have lower risks and lower volatility, and that is true. Crypto has high volatility, which is partially the reason some economists, like Jim Cramer, have been discouraging people to heavily invest in them. Raoul has a thorough insight of inflation, recession, and commodities, and to sum up his views, we can say that he knows it is inevitable, and that on this bumpy economic road, there's a dip ahead. In almost every sector, people are bound to see dips. Some would go lower than others, like Nasdaq has been down 30%, whereas bonds have been doing way better. It is uncertain which investment or sector would bring the best benefits, but calculated decisions can really be made by studying the statistics like Raoul did. He believes in investing in tech stocks, crypto, and bonds. He even tweeted some days ago saying, "Bonds are looking like the best macro bet out there right now. Brace, the global economy getting ugly fast." Even with crypto, Jim Cramer claimed that he wouldn't invest on leverage, but would only do a small percentage of his own money, and that too on fairly stable coins. At this point, with oil prices on the hike and everything skyrocketing, there is a positive end to it all. That would happen either with demand destruction or some big companies collapsing to zero for others to learn from, or a completely new scenario that the world has not yet witnessed before. So far, all the financial predictions made are based on past records and how the market has behaved. But the world saw something completely unexpected and new, like COVID, and who can say that something completely out of syllabus can't hit the economy? Raoul also emphasized a lot on the dollar throughout his interview. He thinks it's the king asset, and well, that's quite true. It has a lot of value in the international market because it denotes one of the biggest necessities, oil. Most of the world actually trades in dollars and buys it when the exchange rates are lower. Even Jim Cramer wishes to back cryptocurrencies with US dollar to legitimize it and add to the power of the currency. This would centralize the dollar in the entire currency system and make it global. So at this point, even the dollar is something people could actually invest in because with the rising inflation, it does have a lot of value. But that's for the international market. Well, that's all we have for today's video. Do you agree with Raoul and think that demand destruction would be the final bounce back for the market and for the recession to finally be over? Let us know in the comments below, and make sure that you like, subscribe, and share this video. Thanks for watching, and we'll see you in the next one.